Okay, you guys, we'll now take a look at exercise 10-2 on page 566. It's a similar problem, but instead of dealing with a building and land, here we're dealing with equipment. We want to decide what to capitalize as part of the cost of the equipment. And here we're also going to look at the journal entry that would get that on the books. Oak Tree Company purchased new equipment and made the following expenditures. Okay, they had purchase price $45,000, sales tax $2,200, freight charges for the shipment of the equipment $700, insurance on the equipment for the first year $900, and installation of the equipment $1,000. The equipment, including sales tax, was purchased on open account with payment due in 30 days. Means they purchased it on account, so we'll use accounts payable there. The other expenditures listed above were paid in cash. Prepare the necessary journal entries to record the above expenditures. Well, first, they don't give us a date here, so we'll leave that off. But first, we want to debit equipment. But the main question here is for how much. Well, we want to include the $45,000 purchase price. I think that's pretty obvious. We'd also include the sales tax. For us, that's just another part of the purchase price. It's a difference for the person selling us the equipment. They have to send it into the state. As far as we're concerned, the purchase price was $47,200 instead of just $45,000. The sales tax for us is just part of the purchase price, really. Freight charges for shipment of the equipment. Okay, any charges to get the equipment to your place of business would also be a part of the cost of the equipment. And then installation of the equipment, getting the equipment set up and ready to use for its intended purpose, would also be a part of the cost of the equipment. So we'll add that $1,000 as well. And so our debit to equipment, the amount we're going to depreciate over the useful life of the equipment, its true cost to us to get it purchased, sales tax paid on the purchase, delivered to our place of business, and maybe it's in parts, put together, set up, ready to use. All of those would be included as part of the cost of the equipment itself. And that comes to $48,900. Okay, it says it was purchased on account. So we're going to credit accounts payable. But for how much? Well, how much do we owe the vendor? Well, we'll certainly owe them the purchase price plus the sales tax. $45,000 plus $2,200. We'll owe the vendor $47,200. Okay, freight charges and installation of the equipment and insurance. We'll have to assume. They say we don't have to assume. They say all those expenditures were paid in cash. Well, the freight charges and installation of the equipment are included here, so we'll credit cash the asset that decreased for those two, which total $1,700. Okay, now for some reason it's bothering me not having a date there, so I'm going to make that A. And then the next entry, the insurance, you guys, we've paid it ahead for a year. Insurance on the equipment. So that's an asset for us. We'll debit prepaid insurance. Now, as you probably remember from financial accounting, as time passes off, a year from now, that entire amount will become insurance expense. For now, though, it's prepaid insurance for the first year, $900. Whoa, not sure what happened there. And we can assume, or again, we don't have to assume, they told us that was paid in cash as well. So we increase the asset prepaid insurance with a debit. We're going to decrease the asset cash on the credit side. So Kind of a similar problem to exercise 10.1, except here we were dealing with equipment rather than land or buildings, and we looked at the journal entry as well. I think if you work this one with me, you shouldn't have any trouble really with exercise 10.2 on the Connect site. If you have any problems, please be in touch. Thanks.